Good morning, everybody. This is Jim Cagnina with Infinity Futures. We appreciate you taking the time out of your busy schedule to be here with us today. We have a very special guest presenter today, and Gavin Holmes from Trade Guider. Talk more about Gavin in a second. I do want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition is money I could afford to lose. Doesn't change my lifestyle, lengthen my retirement horizon, or overly anger Mrs. Cagnina. Now, I understand that last part's kind of tongue-in-cheek, but all this stuff matters in life, so you have to be careful. If you're not sure where you fit on the risk capital curve of things, contact your customer service rep here at Infinity Futures. Everyone has one, whether you like it or not, whether you're a customer of Infinity or not, or a customer of Trade Guide, or doesn't matter. Feel free to use that free resource as you go through the discovery process of whether trading futures is right for you or not. If you don't know who your customer service rep is, just type in a little question into the question box, and we'll be happy to introduce you. Or you can contact me. My name is Jim Cagnina, and I'm easily reachable at trade@infinityfutures.com or through any other method you could figure out to get a hold of me. Come to the office. We are in a new location now in the West Loop in Chicago. It's a great area of town. We're on Randolph Street. A lot of cool things happening here on the development side, and we're happy to be here. That's it, I guess, really. Then we'll start talking. Well, you know what? Remember, past performance not indicative of future results also. That's very important. You hear that often. It's not just a tagline. Paradigm of the market changes. Things that worked yesterday may not work tomorrow, and all that stuff. So keep that in mind as you go. We've got a whole bunch of questions in here, which we will answer as we go forward. Gavin Holmes, Trade Guider, CEO. First we had Livermore. Then we had, who was the next guy? Wyckoff. Then we had Williams. Then we had Holmes. Each generation gets a little better. Now, the internet, of course, helped, and the sophisticated algo computers we have helped, and Mr. Holmes has mastered this and able to provide us this in a highly, quickly, speedy, real-time decision-making basis. And he is going to introduce yet another improvement called Sharpshooter Trading Package, which we'll talk about in detail today. But we're happy to be part of that lineage and to be able to listen to not only the history and evolution of volume spread analysis, but how Gavin's kind of taken it to the next level. So having said all that, Gavin, welcome. We appreciate you being here this morning, actually this afternoon for you because you're in the UK. Could you hear me?
I can indeed, Jim, and welcome everybody. Thank you for the kind introduction, and I was a little bit concerned when you said had in the past tense with me. I'm definitely still here, but you're all right. The lineage of what we're going to talk about today goes back to the 1920s with Richard Wyckoff. So let me know when you want me to take the screen, Jim, and I'm all ready to go, and I'm looking forward to being with everybody. In fact, I can do it now. I can take the screen.
I have contributed as much as I possibly can contribute so far, so go ahead and take it over.
All right, guys, welcome everyone. A big turnout today. In fact, we've had more sign-ups, I think, for this event than we've ever had in the 15 years that we've been doing these, so welcome to all of you. I know some of you can't attend live. You're going to be watching the recording, which is fine. Can you all, first of all, welcome. Can you all see my screen? And hello, Tom. Nice to see you. Hello, Pat. Hello, Peter. Hello, William. In fact, I see loads of customers here, so welcome to you if you're a Trade Guided customer. Okay, good. And what we'll do, before we really get underway here, my name is Gavin Holmes, as Jim has just said. I'm the author of the book Trading in the Shadow of the Smart Money. I was taught to trade by the late Tom Williams, who was the inventor of volume spread analysis. And unfortunately, Tom passed away in November of last year. So to some extent, yes, I am probably one of the people in the world, there's still others, that teach this method. But I will say this is not down to me. In fact, the success of our business, certainly over the last few years, has been down to a number of individuals, including Grigory Margolin, our Chief Technology Officer. I'm going to be showing you his work today. AJ Robinson, who's one of our team members, Steve Phillips, who runs the trading room, Danny, and I could keep going. Danny runs our traders lounge. it is a team effort. I mean, I couldn't do any of this on my own, so please, you know, although I like to be the front man for the company, which I'm honoured to be, I must say that very much so it's a team environment. And when we have customers that come and join us and they join Infinity, we are a team. We're here to battle the markets. And sometimes, you know, when Tom Williams was teaching me to trade, he said, Gavin, trading can be a little bit like being in the trenches of World War I, and you're popping your head up, hoping you're not going to get shot. And sometimes it feels that way. It's a lonely business sometimes. And today I'm going to show you why it doesn't have to be lonely. And I'm going to show you a brand new strategy called Sharpshooter that we have developed for our fund. And more importantly, I'm going to show you it as I'm going to use a PowerPoint to start with, but we're going to be going to live charts. So before we start, very importantly, Trade Guider Limited, who I'm the managing director of here in England, is registered here in the United Kingdom. So I do want to repeat the important disclaimer to you all. Trading futures, options on futures and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited, and we're regulated by the Financial Conduct Authority here in the United Kingdom, number 229906. So I want to start by introducing myself, and that was my dream, my career dream at the age of 16. In fact, I left school. I didn't really want to go to college. I always wanted to be a police officer, and I lived the dream. I qualified for the Hampshire Constabulary. That's me, very young. You can see that mullet. I don't have a mullet anymore, fortunately. But I would like to take this opportunity today, in some ways a somber day, because one officer was killed yesterday in London, here in the United Kingdom. And I myself work for the Metropolitan Police, so I was in the same forces as this particular gentleman. So I would just like to just take a moment, a few seconds of silence, just to remember the people yesterday that were attacked in London. And I do this in a positive manner because things happen all around the world which I don't particularly like to see. Yesterday it was in my home country. So I'm just going to 5 seconds of silence, just in remembrance, and then we're going to get straight to it. Okay, thank you everyone. So again, let me talk a little bit about my history, and this to your left here, the picture you see, is my master, the man that taught me, the man, I suppose everyone in life has a mentor at some point. Well, this was mine. His name was Tom Williams, and he passed away November the 7th, 2016, but has been a great influence on the lives of many traders and investors throughout the world. He wrote a book nearly 30 years ago now called The Undeclared Secrets That Drive the Stock Market. That book was the inspiration for many traders to move forward and learn about the markets, and yet a lot of the information in the book is actually quite controversial, and to some people it actually seems opposite of what you think. Like, for instance, today gold shot up in price, and I've been seeing on some of the chat rooms that I follow that it's a time to buy. But I'm going to show you, you should have been selling, shorting gold today. Now that's ridiculous. Well, Gavin, the price is going up. We wouldn't short it, it's going up. That's the problem you're going to have to get your head around. This is me, Gavin Holmes, and I travel the world. I do seminars, live and online. I've done thousands. And I thoroughly enjoy and am passionate about what I do, because I change lives. And sometimes, you know, some people have come to me and come to the company and they've been trading for 20 years and they've just about made it, but they needed to make a living out of it. And they've suddenly learnt things that they didn't know before. And that's very much how human life is. You don't know what you don't know. So today I ask you, use your mind like a parachute. A parachute is much best used when it's open. I'm very, very honoured to work with Infinity Futures, and so is the whole Trade Guider group. Tom Williams and myself have had our account, and when Tom was a live had his account with Infinity. I've personally known the guys at Infinity for 16 years. In fact, one of the first people I met when I moved to Chicago, because I lived there for 14 years, was in fact Jim Mooney, who's the president there, and then I met the team there. And I've grown as an individual working with this company. And, you know, brokerage firms come and go, and educators come and go, but we've got a history between us going back many, many years, and there's a reason for that. Both companies care about you as an individual. We care about your success. Now, why do we need to care about that? People will ask, well, why would you care about my success, Gavin? Because if you are successful as a trader, number one, Infinity and a brokerage firm don't want people blowing accounts out. And number two, if you're successful with the systems that we're going to show you today, then you're going to go and tell your friends and your chat room buddies, hey, this works. We have a chat room that we use, that we launched a few weeks ago on Skype, already growing in membership. And we launched the strategy I'm about to show you, or part of it, live at the Chicago Mercantile Exchange in downtown Chicago in October. This is actually Dr. Gary Dayton, a great friend of ours, Lauren Snedeker, Abraham Cecina, and we launched a new way of scalping the markets, or looking at the markets, I should say. Today I'm going to be looking at scalping, but a new way of looking at the markets, which was, and the book, Judy, was The Undeclared Secrets That Drive the Stock Market, which is out of print at the moment, but I've got a meeting Saturday with the publishers, so it will be back in print. So look out for it. It'll be on Amazon. Maybe you can still get a copy, but they are out of print. So these are the books that I've written. I went from former policeman to fund manager and author. So I believe life is a journey, and it's a journey that I thoroughly enjoy, and I enjoy every moment of it, but it hasn't been easy. And I've had my moments where I've been up against it. So if you're at a point in your life where you're hitting a brick wall, I can assure you that's there to test you and take you to the next level. In my trading and in my investing that I do, I have hit brick walls many times. But I've learned one thing: a brick wall is just what it is. It's something you've got to get over. And once you get over it, you might find there's another one. But once you get over that one, the brick walls become further and further apart. And today, I want to show you a strategy that we've developed which knocks down the brick wall of trading. And I'm going to show you it live. I'm going to use a PowerPoint to introduce some of it. And then you're going to have the opportunity to participate live with us trading next week in our live trading room. So without further ado, I'm going to start with a short video. It's only 9 minutes long, but please listen very carefully. And I want you to listen carefully to the words of the man that helped me, Tom Williams, and listen very carefully to what he says. Because we're going to talk today about trading in the shadow of the smart money. We're going to talk today about learning to trade in the same direction as the professionals, the smart money, as I call them in my book, which is what they are, smart. And today we're going to teach you to be smart.
What is a smart trader? A smart trader is someone who knows how the markets really work. They know how they move, why they move, and who and what moves them. Armed with this knowledge and understanding, they can trade in the markets alongside the major players. Smart traders are in the minority. The majority of retail traders and investors do not have this information. They rely on technical analysis and fundamental analysis to predict market movements. The problem for them is that on their own, these tools and methods don't work, which is why the large majority of traders lose to the markets. Remember, the market needs losers, many of them, so that the informed minority can win. Today, we'll show you how you can become a smart trader, trading in harmony with the professionals rather than trading alongside the herd. So why do so many traders lose? They lose because they've not grasped some fundamental facts which drive all markets. Fact number one: by far the largest players in the market are the hedge funds, investment banks, trading syndicates such as Goldman Sachs, George Soros, and Berkshire Hathaway, headed up by Warren Buffett. These are organizations you've probably heard of, but there are many others which aren't publicly known. But together, they're by far the biggest players in the international trading community. At TradeGuider, we call them the smart money. Fact number two: The smart money have to make money, and they do this by selling at the top of the market and buying at the bottom. Fact number 3. In order to do this, they have to move the market so that the prices rise to the top or fall to the bottom. So, how can they move the markets? Tom Williams, inventor of volume spread analysis, was a syndicate trader in the US and is one of the very few smart money traders to spill the beans on how the markets really work. He explains how the markets are moved.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low, depressed prices. And the best way to do that is to create bad news, put out rumours, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, it was a complete fabrication. Then the directors would look at each other and sort of shrug their shoulders, but the audience heard that, and they think, aye, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all, because we bought in the lows, we're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing, if the opportunity is there.
Markets have always been manipulated. Here's just a few examples. Let's begin with the British petroleum oil spill disaster in 2010. On the 25th of June that year, the shares fell to just under $27. The news was grim, and the pundits and reporters were talking in terms of huge losses and a possible breakup of the company. And everyone who had shares was looking to sell in full expectation that prices were plummeting. And sell they did, straight into the hands of the smart money professionals who bought cheap. Within 6 months, the price of the stock doubled. Buy cheap, sell back when the market rises, and that's how the game is played. On May the 6th, 2010, something very strange happened in the financial markets. This day is now referred to as the flash crash, because no credible explanation has been provided by the regulatory authorities as to exactly what caused the crash or who was responsible. In fact, many investors begin to suspect that all was not what it seemed to be. CNBC's closing bell anchorwoman Maria Bartiromo was reporting on the day the flash crash happened. Fellow reporter Matt Nesto was explaining some unusual anomalies in a number of stocks, even though the mainstream media claimed that it was caused by a lone trader hitting the wrong button, B for billion instead of M for million. Maria saw through it straight away.
Okay, so those are at least 8 names that they're going to have to track down on top of the Accenture trade, where we have the stock price intraday showing us at least, we'll assume, a bogus trade of 0.
That is ridiculous. I mean, this really sounds like market manipulation to me. I mean, this is outrageous.
It happens a lot, Maria. It really does. I mean, we could probably ask the NASDAQ. They may not want to say exactly how often it happens, but it happens frequently, and they go back and they correct. And the thing that stinks is if you, in good faith, put in a trade and made money and then lost it, you lose it.
What we actually witnessed on May the 6th was a giant shakeout of the market. The smart money were expecting higher prices and wanted to catch the retail traders by marking the price down heavily before moving the price up. They were bullish, the stocks were going to rise, and they wanted to buy at the best possible price. Wouldn't you want to do the same? Buy it at the lowest price, knowing you could sell it later for much more than you bought it for. Qantas soars to record half-year profits is the headline on February the 23rd, 2016. Lower oil prices have helped Qantas post a record pre-tax profit, and Best first half profit in the Australian Airlines 95-year history are used directly below the headline. All the news is bullish. The stock has been going up and up because it's in an uptrend. To the retail trading and investing community, this appeared to be a great opportunity to buy the stock because everything lined up. And if you didn't go into the market by now, you'd miss the move. Okay, so buy. What happened? The stock plummeted spectacularly, and the uninformed retail traders said bye-bye to their capital. That's the trading game. Buy low, sell high. Be a predator, a clever predator that understands exactly how the prey think and act. Smart traders appreciate this and understand that quite often all is not what it seems. The media, the sentiment and the emotions will often lead to poor trading decisions and big returns for the professionals. The good thing is that whilst the smart money try and disguise their activity, there's one place where they cannot hide: the price chart. And in this presentation, we're going to show you how to read the footprints left by the smart money on any price chart, whether it's a currency pair, a stock, commodity, or a derivative of some sort. In the next few hours, we're going to show you how the interrelation of price and volume can help us determine whether the smart money is buying, selling, or not participating. And it's this interrelation which forms the basis of the volume spread analysis methodology. We'll show you how you can identify the tops and bottoms of a market in foresight, not hindsight. We'll show you how you can use the three-stage trading process, scan, confirm, trade, to form the basis of a powerful trading strategy so that you can trade in harmony with the smart money. We'll show you techniques that will help you manage your risk and optimize your trading. We'll show you why the media is key and how to trade the news and the volatility often caused by it.
So, thank you very much for listening to that, and I want to now introduce you to the masters and teachers of the Wyckoff method and volume spread analysis. On the left is Tom Williams, on the right is Richard Wyckoff. Richard DeMille Wyckoff was born in 1873 and passed in 1934. He was a stock market authority, founder and one-time editor of the magazine of Wall Street. He founded that in 1907, an editor of Stock Market Technique, and he said, thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transactions second by second, and therefore those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. Tom George Williams, born January the 4th, 1929, he says, if you can read a chart correctly, you will understand the markets do not move randomly, but are moved by the smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume and price. And you have a chance to profit following in their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release the true volume figures until the day after trading took place. What is volume spread analysis? I could spend another hour discussing it, but we don't have time. So I want to get to charts and to the strategy that I'm going to show you today. But if you want to find out more, we have a website which gives the history of all the players that are involved going back to 1920. And you might ask, Gavin, what on earth are we talking about a trader from the 1920s and 30s when today we have computers and we have thousands of different instruments to trade? Because, ladies and gentlemen, as time has moved on and the computer was invented, we've been given more opportunity to trade the markets, but the markets themselves have not changed. The actual underlying principles in the markets are the same. The three universal laws that drive the financial markets are as follows. Rule number one is the law of supply and demand. Very straightforward. Okay? Too much supply, the market will fall. Too much demand, and the market's going to go up. Sounds logical? Most people don't really understand what's there. But rule number two is cause and effect, and that can be shown very clearly, as I'm going to show you today, on a price chart. And then number three is effort versus result based on price. The effort is the volume or the activity of the smart money. And then the result is what happens on the price bar. Does it close on the high? Does it close on the low? Does the price close in the middle on the time frame you're analysing? Very important. There is a fourth law that will govern your success in anything you do in life. It's known as the law of attraction. It's now becoming widespread thanks to the internet. The law is a law, and it's very important to understand that law. And in my book, Trading in the Shadow of the Smart Money, I'm one of the very few, if probably the only trader or investor that I've seen that's talked about this law, which has been hidden for many thousands of years. People don't want to know about it, but in the last 30 years, finally, it's coming to the forefront of humanity. And it's a very important thing for people to understand. What you think, and if you think success, success will follow you. If you think that you're struggling or you're depressed or you're angry, that will also follow you. So it's a very important part of my strategy in trading and my book. So if you get the book, which we're going to give you, then read the chapter 11, in fact, and read it very closely. So what is volume spread analysis? Well, volume is the activity, simple. And on the bottom of any great charting platforms like Infinity AT, which I personally use, you get great volume. And from the volume we're seeing from the futures market, which I'm trading, you're getting volume from CME Group, the Chicago Mercantile Exchange. You can also get it from the ICE exchange. There are other futures exchanges around the world. Today we're going to focus on the US market because this event is sponsored by Infinity. And then we look at what we call the spread of the bar. Now don't please confuse that, okay, with the range or the, the bid-ask spread in certain things. It's the range. And I want to call it the range because in America it's very much known as that. It's the high and the low of the price bar in the time frame that you're analysing. So if this was a daily chart, you'd have very high activity, you'd have a very wide spread or wide range, and then we're going to look at the closing price. We don't use the open in the volume spread analysis methodology because nothing's happened at the open yet. It's just opened. There's no effort, there's no result. So why use the open? Some educators and traders out there think the open's vitally important. In VSA, it's not important at all. What is important is the result of the effort created by the volume, which is seen in the closing price. I'm going to repeat that because it's important. What we're looking at is the result of the activity of professional money on the range of the bar and the closing price. And then we're going to look to see, are they encouraging buyers as the market goes up so they can sell? Or are they encouraging sellers as the market falls so they can actually buy lower? Think of the logic. If you ran a market stall or a shop and you sold oranges and lemons and you go to your wholesaler and he says, today, Mr. Customer, we're selling this lemon and this orange for 5 pence or 5 cents or 5 ringgit or wherever you are in the world, whatever your currency is. If you went out to your market stall and sold it for 3 cents or 3 pence or 3 ringgit or whatever it is, or dollars or whatever, right, you are going to look, well, we'll stick with the cents, sorry, so forget the dollars, you'd make a lot of money if you sold it for $3. But if you sold it for lower than you bought it for, you would be losing money. The market is the same. You have to buy an instrument, be it a futures contract, a derivative of something, be it a stock, be it a commodity like gold. You have to buy it at the lowest price and then mark it up on usually some good news, like we've seen in gold many times. They say gold's the safe haven. Today there's been a big report that gold was going to go up to 1,300 and all the news was bullish, and of course the market went up this morning in London and then crashed, and it's falling as we speak, back down to 1247 as I'm looking at it here. And, you know, I'm going to show you the chart that proves this. So how can what the method we're going to show you help you to make it in the market? How can volume spread analysis identify these moves? Well, volume is activity. Volume equals activity. We, and I talk about all of us listening to this, should be, some of us won't be, but you might at the end of this presentation, we are interested in volume because it tells us the consensus of opinion amongst the smart money. The spread of the bar and the closing price in relation to something that's happened in the past, as I'm going to show you, confirm the intention of the smart money. Does volume work in all markets, including currencies and indeed foreign exchange? Yes. Yes, it absolutely does. I personally like to trade the currency futures contracts on the CME group, and that's why I use Infinity. Because actually one big benefit that most traders don't understand between trading Forex directly with a market maker and trading on the exchange through the CME group is that many Forex companies are not regulated, whereas the CME group, and specifically Infinity here I'm going to talk about, are regulated by the NFA. That makes a big difference. Okay, because number one, as you're going to see, I could show you a chart of Forex with tick volume, and I could show you a chart with Forex, with currency futures volume. And what you're going to notice is when the markets move, they're arbitraged, which basically means if it moves in the spot market, when the banks are moving the spot, they're going to follow in the futures market. And it's a strategy I'm going to teach next week in our live trading room. So yes, the answer is it works whatever you trade, including currencies. Does futures have spreads like FX? No. You go in at market rate. And so you're not, you know, they say there's no commission, right? You pay a commission when you trade futures. I pay a commission. Now, trade guided customers, if you talk to your representative at Infinity, do get preferential rates depending on size, which is why we've got hundreds of customers from Trade Guider that use Infinity. Some of you may not even trade at Infinity and you're thinking of it. Guess what? Next week we're going to show you, we're going to do some webinars with these guys and show you the benefits. But that's up to you. Remember, there's always choice. And today you're going to have information. I'm going to give you my book. I'm going to give you a video. There's no charge, and I don't require you to give me your personal information at all. I know that if you connect with us, you will see the value in what we teach. So what I'm going to show you today is a new strategy that literally we've been doing for the last few months as an internal company, but we've made it available to the general public, and it's not even available. It wasn't even available until today, and you're the first to see it, apart from people who are in our live trading area. We call it the Traders Lounge, which is an area where we want to bring in more and more like-minded people, women, men, and some people who are students. I've got one guy who's like 17 years old, and he's trying to learn the markets. Great stuff. We want to bring people together as a community and teach them how to battle the market and win it. We have a website called Trade to Win. Trade to Win. Now, that website has a lot of free information on it that I'm going to give you, the link to the book and the link to the video. But what do we want to achieve? Well, we want to identify trading opportunities by finding what we call unusually high volume, followed by low volume at a similar level. Now, why is high volume extremely important? I'm going to go and jump for a second to a chart because something's just happened. And I want you to tell me when you can see my Infinity AT charting platform and gold, the 15-minute chart. Can everyone see this, please? Because if you can't see it, I'm moving between my different trading screens. I've not done this before, so I'm trying.
Yeah, it's coming in clear, man.
Perfect. Thanks, Marcus. Good. So what do we notice here about the volume at the right edge of the chart, which is the activity in gold? What do we notice about it? Just type it in. What do you see? What do you notice about the volume? Just type it in. Just all of you, please type in. What do you notice about the volume from here that suddenly happened here? What do you notice about the volume? Which again is the activity of the professional side of the market. Yao Ming. Someone's read my book there. Good. Very high, ultra high, massive Yao Ming. I love the Yao Ming analogy. Yeah. Now, what colour are the signals at the top here? Are they red or green? And please don't think I'm being stupid. I'm asking for a reason. What colour are the indicators in the strategy here? Are they red or green? Please type in. The more you engage with me, the more I can teach you. What colour are the two signals marking this top in gold here? And what we can see, if I left click in the strategy here, is it tells me something. It tells me supply is coming into the market, right? Which means that as it's marked up and all the public who use MACDs, stochastics, moving averages are buying frantically on this massive up move thinking it's going to keep going, who do you think is starting to sell into the buying? You tell me. Who do you think is selling into this rush of buying from the herd or the group traders? The big guys, says Rich. Yeah, big guys. I like that. We call them in. I remember going to, I think, I'm trying to think which country I was in at the time. It's Poland, and they call them grubash. So if you're in Poland, you know what I mean. The grubash. That's the big fish, I believe. If anyone's from Poland, you can confirm that to me, but I'm pretty certain that's the translation, the grubash. But it means, yeah, the big players are coming in. So we've got a few Polish people in, obviously. And here, what do we see? We see effort versus result. Okay? The result is the, yes, Sergey just says fatty. Okay, close. A big fish, a fatty, whatever you want to call it, but the big players and the smart money. And here we have the universal law at work live on your chart. All right? This is effort, but there's no result from effort, which is a red signal. And it's a very serious sign of weakness. When we have in our strategy a sow, it's not a female pig. It is a sign of weakness. So please, when you see sow, and people have emailed me, why do you have a sow in your strategy? It's an abbreviation for the word sign of weakness. And we also have SOS, which are green signals which mark bottoms. Okay, and they're called SOS. It's not save our souls. It's a sign of strength. So the two rules you must understand if you're going to get your head around this is strength in markets happens as they fall. But your moving averages, your stochastics, your MACDs will be telling you to short these areas when in fact we will be showing you these are great places to buy. So let me now show you the strategy in a little bit more detail. And let me show you the principles behind it. So first of all, as I've just demonstrated, we're looking for unusually high volume on a chart. Okay, Javier, you said, and that's a good question, how far back should you be looking for signs of weakness in the background? With this new strategy I'm going to show you. Okay, it's going to be absolutely specific. We're not going to say, maybe you should do that, maybe you should do that. In trading, one thing you must understand, as we said right at the beginning, everyone wants in life to have definite certainty about everything they're doing, although you can't. You know, sometimes you can cross a road 1,000 times with no cars coming, you're fine, and then one day you just haven't looked and a car comes. There's no certainty in life, so don't expect certainty when you're trading the markets. In fact, the whole way the markets work is to create uncertainty and to also almost blindfold the group or the herd into making bad trades. What I'm going to teach you today and what we're going to show you with Infinity today is a strategy. Now, a strategy is exactly that. It's not a guarantee of making money. There's no guarantee. I can't sit here and say to you, hey, you take the strategy and every trade you make will be a winner, because I'd be lying to you. And you know, I hope that I would be lying to you if I said that. What I can tell you is this. The strategy is rule-based and it involves risk management. And the most important part of trading isn't the winning trades, it's managing the capital that you have in your account, which many educators do not pay any attention to if they avoid it. In fact, most educators out there want to tell you how easy it is to trade, how easy it is to make money, how easy it is to trade these markets. It's a load of, excuse my French, BS. It's not easy. If it was easy, everyone would be making millions. But it can be simplified. And our strategy that I'm going to show you simplifies and gives some basic rules to follow. Do I expect everyone in this room to follow the rules? No, because you're human beings. Like me, when someone gives me rules to follow, I usually break them to see what happens. That's a fact. I have to admit that. When I was a police officer and I was told in riot training that I should do X, Y, Z, and you have to do it that way, I tried something different. And actually, the third time I did something different, one of the guys, the instructor, said, we're going to incorporate that into the strategy of managing a crowd. I'm not going to discuss it now, but it was a very simple thing. I did the opposite of what everyone was being taught to do in that particular instance. That's my personality. That's the way I'm made. Now, I'm not always right. I make many mistakes, and the strategy I'm going to show you is through trial and error and writing down in a trading plan where I made mistakes and where I got it right. And then it wasn't just me. This is the wonderful thing. It's come from a group. The instigator of this whole strategy, the guy that programmed it, is Grigory Margolin, who's our programmer and our chief technology officer. Now, I could not have done what he's done, but what I can do is come up with his thought or the creative idea, but I don't have the skills required to put it into a software program and a strategy. Grigory does. So I'm going to show you it. So the next thing is we've got to look at trend, and it says here to show visually trend alignment, to alert the trader when a major principle has been found in any time frame, and we can now do that through the Infinity platform with an email. To alert the trader when a sequential trade setup, excuse the R, I need to change that, has been found. To allow a trader to monitor and scan, this is the big benefit, hundreds of charts, so the system is sniffing out trading opportunities for the trader to analyze. Now, it wasn't me that came out with the word the sniffer. In fact, that's our investor, Neil, who said, hey, you know, what you've got here is something that's sniffing for trading opportunities, and that's exactly what it's doing. To show, and this is important too, when a market's in congestion, you shouldn't be trading the market. So when it's congested and going sideways, or what we call whipsawing, it's not a great place to trade. The system will tell you, don't trade it. When it's aligned, it's very important. So let me go, and this is a key part of what I'm about to show you now. When it is actually aligned, okay, in this strategy, you're going to see alignment in multiple time frames. But we've now, yeah, and Auntie says, will the sniffer or will the strategy, I don't want to call it the sniffer, that's a separate thing, don't confuse the wording. This is called sharpshooter. It's a strategy. The sniffer is just an analogy. The sharpshooter is the strategy that we've developed. And what I'm going to show you today is the strategy. I'm going to share with you some of the document, not all of it, but some of it. If you want the strategy document, you can get it from Infinity directly. I'm going to show you it on the charts as well. So whilst I'm using, for the basis of this webinar, some PowerPoints and the strategy, we will go for the last half an hour to the charts and show you it. And if the trades are there in the strategy, we're going to put them, not trades I've taken today or anything like that, live, if they're there. So, welcome to the Sharpshooter for Infinity Futures trading strategy. This is a scalping strategy that we've developed for our fund and also for trading futures. It works in other instruments, but today I'm going to focus on futures. Can you all see my screen before I carry on? And Marcus, you don't need to answer, I can just look. Can everyone see Sharpshooter for Infinity Futures, Wyckoff volume spread analysis, scalping strategy for futures? Good. Okay, thank you. So, let's move forward. Now, first of all, I wrote this document and it's been edited several times, and we've had feedback from many people who are in the trading room who've emailed me with feedback over the last week. So this document I'm showing you has been under development for some time, but now I'm very comfortable and confident with what we've got. It does have, as always, a legal notice and disclaimer, which I don't need to read to you, and the disclaimer I read at the beginning, which I don't need to read to you. But I do want to read to you this, because this is important. So why develop a strategy for scalping the markets? Well, that came from a survey of our customer database of nearly 5,500 customers. And many of those did reply to us with a survey asking what they found difficult about using the Wyckoff VSA method and what they would want to make it easier. Some people who trade this method are very successful. Some people just don't get it. So my role, my mission, is to ensure that the people don't get it, do get it. If you already get it, you may not want to use this strategy. It's entirely up to you. But if you don't get it, or you're just coming across our work, this is a strategy that is rule-based and gives you an idea of why smart money do what they do. Why is gold falling today after it rose on high volume? because, as you'll see, this strategy identifies it. So welcome to the Wyckoff VSA Sharpshooter Scalping Strategy for Futures. The background. When I first met Tom Williams in the year 2000 and began to take an interest in the financial markets, Tom made a statement I will never forget. He said, Gav, the fact that you don't know absolutely nothing about trading and investing and have no preconceived ideas will make you an excellent student for me to teach, and one day you will be a great success in this business. Looking back, it's been a great journey and it continues to be so, but before Tom passed away in 2016, he had a wish. He said, the biggest danger to a human being trading and investing in the markets is actually themselves. We, meaning TradeGuider, need to create an automated trading system that takes much of the analysis work away from the human being and let the computer do the work. A computer does not have flaws in its logic. Tom was describing to me what was in his mind, an automated volume spread analysis trading system that found trade setups based on the key principles of Wyckoff and then computerized by Tom. Again, we've got details in this document explaining the whole methodology, but for the purposes of today's webinar, which we are limited for time, I'm not going to go through all this document. This trading system would intuitively trade alongside and in harmony with smart money players who move and manipulated all markets. If you want to find out more about market manipulation in case you don't believe it, go to Google after this event and type in the word market manipulation. Do it for yourself, because you may think everything's very straightforward, everything's regulated, but in fact the fact that markets are manipulated is a good thing for people who understand when it's happening and how to follow it, which is what we teach. It was during 2016 that our head of technology, Gregory Marglin, showed me the latest development of a product to be used in our fund called Smart Center Pro. Now let me be clear before I carry on. I came up with a thought. Gregory created the product. So, you know, this comes down to teamwork, and I want to stress this. Everyone has thoughts, every one of us, every day. But most people don't do anything with their thoughts, they just think them. They might think they can create an Apple iPhone or an Apple iPad. Steve Jobs did it. You might think you can create a futures trading strategy and computerize it. I'm lucky enough to have found someone who could do it, and that's what I'm going to show you today. The concept was quite simple. You find trade setups based on the Wyckoff volume spread analysis methodology that are in harmony with the trend of multiple time frames using the proprietary tools in the TradeGuider software toolset, and I will add, which we've put into the Infinity AT charting platform, which is also a white label of Sierra charts for those of you that happen to know it. At the launch of Smart Center Pro, which was live thanks to Infinity at the CME Group headquarters, the Chicago Mercantile Exchange, in downtown Chicago in October of last year, we were able to demonstrate live trading using the system and using time frames starting with weekly at the time, daily, 4-hour, hourly, 15 and 1 minute charts. This was by far the most successful launch of any TradeGuider software product in the last 16 years since we started the business. This new scalping strategy that has been developed by our team was based on feedback from customers, many of whom traded in smaller time frames and, like me, observed that accumulation and distribution has to begin in the smaller time frames first. I'll repeat that. Accumulation, which is buying, and distribution, which is selling, has to start in the smaller time frames first. And if you recognize that, you'll realize if you want to be in and out the market and try to at least mitigate some of your risk, you don't want to be carrying trades for 4 days. Because if a flash crash happens, hey, whoa, what just happened? So this strategy is not for people who want to swing trade. It's not for people who want to buy stocks, because we're going to have a separate strategy for that. This is for people who want to get in and out the market relatively quickly using the time frames that we've tested. So we know that accumulation and distribution has to begin in the smaller time frames first, and then it becomes obvious in the bigger time frames. But waiting for the big time frames to align with the smaller time frames often meant a large part of the market move was underway before the trend alignment system triggered a trade. While this could be changed in our hedge fund software Smart Center Pro to the smaller timeframes, we realized as a company through feedback that a specific strategy that was tested for specific market with written rules and less requirement to learn all the VSA signals may prove to be a winner. And so the strategy was developed. So the concept is this. It's based on scan, confirm, trade, which I've already read to you. So I'm not going to read all this out again because you've already heard it. But this is important. The biggest time frame we're looking to monitor is a 30-minute chart. The next time frame that we monitor is a 15-minute chart. In futures, this does not apply to stocks. This does not apply to Forex. This is purely for futures. And I'm not going to explain in this webinar that's public why we chose these time frames, other than to say that these two here were the favourite time frames of the late Tom Williams. And for reasons I could never really quite get to, other than he said, well, when I started looking at charts, Gavin, with the programmer, the original programmer, Bob, he said those two time frames seem to give cut out a lot of the noise that you get on small time frames and identified a big move, a bit like what's happening in gold at the moment. There are 6 time frames in total in this strategy. The trading process, rule number 1, this is very important. Do not trade a live account with this until you've made 100 trades on a simulator, which Infinity will provide you with. Record the results and take screenshots of each trade with risk amount, profit target, and results achieved. Now, why do I say that? Okay. Are these charts 24-hour charts? Yes, they run. I'm using continuous contracts, Rick. So yeah, they'll be continuous. Correct. So again, in currencies, apart from when the market closes in America and the futures market has to close between, I think, Marcus, between 3:15 and 4 p.m. Chicago time. Is that right, Marcus? Pretty certain I'm correct on that still. It's 3:15 to 4 p.m. Chicago.
It's actually 4 p.m. now to 5 p.m. Gavin.
Okay, so there you go. So it's 4 to 5 p.m. I lose track of time because I moved to England. I moved back to the motherland where GMT is. I understand this, but there you go. 4 p.m. to 5 p.m. Chicago time, right? So keep in mind you're on CST there. The markets will close. You won't be able to trade futures while they add up all the volume, they do all the stuff, and then they open again. But basically, it's a 23-hour market trading the currency futures. So trading step 1, and why do I say you have to trade with a demo account first? Because you have to believe that this works before you go to the full strategy. Doesn't matter how big your account is, by the way. Doesn't matter if you've got 2,000, 3,000 bucks or whether you've got 5 million. Doesn't change the strategy, right? But what I will say is, in order to make anything in life successful, doesn't matter what you're dealing with, whether you're dealing with selling cars, selling houses, trading, you've got to believe you have the ability. That's very important. The Infinity account is available for 30 days, I believe, which is more than enough, because this strategy should only take you 10 hours to learn and another 10 hours to start trading it. However, your 100 trades, that could take up to a week. Sometimes it might take 2 weeks. I've done it, and I did 100 trades in 5 days on the simulator. Sometimes it varies though, because the market conditions change. This will adapt to conditions. So step 1, we check the major news areas and connect and make sure that we're not trading on the news. There's a couple of websites here that we recommend, because you've got to be very careful around news events. You can lose a lot of money in the markets when the market news comes out, and we've got a bigger news announcement next Wednesday here in the UK, which is going to affect the market. Next week could be the best trading week of the whole year. The whole year so far. It's been good so far, I've been saying that. Next week could be better. Now, why could it be better next week? Very simple. Because what we see is news-driven events. So beware of the news. Be a predator and not the prey. Do not trade at or near the major news events unless you want to do so. The big volume happens at the events. Whipsaws the markets and catches stops. Now, we're going to go to trading step 2. And at this point, I'm not going to reveal the rest of it because I'm going to go straight to the chart. And we're going to look at sharpshooter. So, tell me when you can see the chart. Okay? Tell me when you can see the chart. You should now be able to see a chart of gold, which I happen to have running at the moment. Okay. Okay, Jamie, if I may, I'll read out your question. He says, the volume is so important. It's vital. It's like if you had a car, Jamie, and you didn't have a gasoline tank, it wouldn't go anywhere. So my recommendation, if you want to see volume, is talk to your guy at Infinity, whoever that may be. They'll give you a 30-day download of the platform that I'm showing you, which has got volume on it, and you don't have to fund an account. You can get a demo. Okay, so you don't have to commit any money. You can get a demo. Now we're going to start by talking about the chart. Now, first of all, we've already talked about this signal. On the left is the sharpshooter strategy that's programmed into our hedge fund software. George is saying, what's the minimum account size? Marcus can come to that and text you privately. I don't know is the answer, but you know, I don't think it's much. I believe it's like $5,000. But Marcus, what's the minimum account size when you fund with you guys?
Start with a minimum of a $3,000 starting balance risk capital.
There you go. Okay. So if you're trading in the markets and you couldn't afford $3,000, then I'd say, with due respect, you shouldn't be thinking of trading. Wait till you've got the risk capital that you can afford to lose and won't upset Mrs. Cagnina, because she'd be very upset if you lost it, as Jim mentioned right at the beginning there. And it's true, my wife supports my trading, because if I lost my accounts, and I've got several, and I do make losing trades, it's not going to cause a big row. So that is an important point. Now, what we see here is a signal, and it's called a VSA principle. I don't use the word buy and sell signals. Okay, you'll notice that because these have indicator information boxes, and these were developed 25 to nearly 30 years ago now by Tom Williams, and have been further improved by retired fund manager Philip Friston, who's done a lot of work on these, and they are part of a strategy that now looks at trend as well as indication. You see, you'll notice there's 3 or 4 red indicators here, lower down, okay, but the market still went up. They were on much lower volume. Had you shorted that indicator, you would have actually made a bit of money. Had you shorted that indicator, because this is a 15-minute chart, you would have made a bit of money. But that's not where the big move is. We're looking for the Grubash, the big money. And this is where it came in. And it usually happens, just in case you want to be sure of this, when the big players start to move the markets. Now, when does that happen? The London Open is a big one. The Asian Open is, and the close of the Asian session is a big one. And the biggest time to trade, in my opinion, is between 2 p.m. London time and 5 p.m. London time, when we have what's called the London fix, which fixes the interest rates. That's a very important time. So what do we notice that's going on? Well, we notice very big volume happening here. Now, let me introduce you to Sharpshooter, and I'm going to show you some of the rules. Now, first of all, this is our Smart Center Pro hedge fund software, but we've removed a lot of the things that are in here, okay? And I won't go through all of those, because when the download happens, there are things you won't be able to change in the strategy. It's pre-programmed. However, you don't need to know what to program in here, because it's there for you with the written strategy. What we can see is certain things here are flashing. Okay, now I'm going to reset it now live. Okay, like so. And what you're going to hear in the background, and let me just put this up for you. When a sign of weakness or a trend alignment has started to happen, this is what you're going to hear.
Trend alignment to the upside has arrived.
Or
Trend alignment to the downside has arrived.
Or
Sign of strength has arrived.
Or
Sign of weakness has arrived.
Okay, so let's see what happens. Now, at this moment in time, this is live now, no PowerPoints. Yes, it's Richard, Steve, that's true. It is Richard. Yeah, the voice, someone's asking about the voice. The voice is actually my business partner, Richard Bednall. and he's done the voiceover, but we also will be adding into the strategy and also into the Smart Centre Pro fund management software Tom Williams recordings that I did for over a period of 2 years, explaining each of the setups, like this particular one here, with a voiceover. That will be coming soon. So at this moment in time, we're scanning the markets, and again, if I shut this down for the moment and we just go through visually, what we're going to see is what these markets are doing. So this is the Aussie dollar, and we can see on the chart there's a lot of buying. Now, we've just had some things going on here.
Trend alignment to the upside has arrived.
Okay, we've got some uptrends here. We also got, yeah, it's uptrends. Okay, there's one. I left click on it, and the strategy is now operational. Here, we can see 6A. We've got green on the 3-minute, 5-minute, 7-minute, 9-minute, 15-minute charts, but the 6S is all to the upside. Now we seem to have something here.
Trend alignment to the downside has arrived.
So we're going to click on that. And again here,
trend alignment to the downside has arrived.
And we just left click in the black box, and now the strategy is searching or sniffing for trades.
Trend alignment to the upside has arrived. Trend alignment to the upside has arrived. Trend alignment to the upside has arrived.
Okay, so now the strategy is set. Okay, so what do we see here? What we see, no, Nanak, you don't enter the market when it speaks. You do not enter the market when you hear a trend alignment. Let me be very clear. It's not telling you to take a trade yet. What it's doing is saying we've seen, well, the one that's aligned mostly is the British pound. If you left click in the software, which is in the AT charts strategy, you're going to see, I'll ask you all a question. Looking at that particular scanner, would you be looking for long trades or short trades? Let's just ask the audience. There's many of you still here. Would you be looking for longs or shorts based on what you're seeing there? Okay. Okay, you notice something here on the 30-minute chart that happened about 5-6 hours ago. It's got a box around it, which means it's a very important signal. It's called a 2-bar reversal on the British pound. Test, test, and over here, the reversal. The result, you can see for yourself. You're absolutely right. Howard, I'm not going to take a long trade right now on this instrument. Absolutely not. If we get a test here, I will take a trade to the long side because it's being marked up. Okay, you can see, if we look clearly, the trending system is green. You can see where the signs of strength have come in. Right, that's every half an hour. Down here, look at the volume on the down bar. That's a high volume test and it caused the markup. This is still going to go up. Jamie says, where does the volume data come from? In this instance, it's coming from the Chicago Mercantile Exchange, the CME. Okay. Now here, we have very high volume to the left. So would I want to trade unless it breaks out the top of that? Not yet, but it will do, because we see here a test, a secondary test, and we'll probably see, while we're in this seminar, a third test. What is a test? It's a very simple thing. It's low volume. No, Tom, you should definitely have that. So just contact AJ and he'll switch it on for you. Okay, so Tom, just put a ticket in for AJ. He just needs to set the parameter for you. But yeah, you know, you do get that. Okay, let's go back and have a look at what's going on. Okay, so at the moment, nothing's happening. Now, I'm not dealing with a PowerPoint here. I'm dealing with live market conditions. So I can't do anything for the moment until one of these alerts comes up and tells me if it's an uptrend, I want to hear this.
Sign of weakness has arrived.
This one.
Sign of strength has arrived.
If it's in a downtrend, I want to hear this.
Sign of weakness has arrived.
Because what you're trying to do, and okay, Javier says, where do you set the trigger? It's in the strategy document. Because what we do, once a test is confirmed, the next bar closes higher. So your entry point would be where that close is the close of the bar. So that would be, so you see the test, you don't go long there, you wait for the close of the next bar, which would be there. That would be the entry for the long trade. Here, where would you put the stop? Good question. After the last reaction point to the upside. So in this case, where the diamonds or the dots turn green is where the stop goes. But I would say stop management is very individual. It's down to you. Some people in this room will be trading $1 million accounts. Some of you will be trading $3,000, $2,000 accounts. I don't know. So the strategy has rules in it that are based on risk, but it doesn't tell you exactly where to put the stops. Okay, so Judy's asking about gold. Well, look, let's have a quick look at gold, right? And I'm just going to put the scanner up. Now, remember, the Smart Sensor, this strategy sharpshooter, uses the scanner that's built into the software. So I'm going to ask you, this is the scanner currently for gold. Let me ask you an order question based on the right edge of the chart being the last bar that's formed. And this is, again, a 3-minute, 5-minute, 7-minute, 9, 15, 30. Based on what you're seeing at the right edge of the chart, would you be long, short, or no trade here at all? And Judy, answer that as well. Long, short, or no trade at all? What do you think? We just had something fired off on natural gas, funnily enough, which I don't even trade, but we're going to have a look at it. But yeah, the answer is no trade. This is what we call the Christmas tree in Trade Guider, affectionately, if you celebrate Christmas, because everything's mixed. You've got green, red, and grey. This is called congestion. The market is basically congested, and when it's congested like this, which we can clearly see, green, grey, red, grey, grey, green, there's no trade here. Don't bother. There's nothing here. And if we go to gold, let's see if we could have made any money in gold. Well, look at that. Yes, it went short, but this morning, this here, when that bar filled, everything was red. But look now, it's gone down, it's gone green, and it's going up. Why is the largest volume here on the down bar? It's not. It's on this. Oh, you see what you're saying here. Because if you look at that, it's a 15-minute chart. But if you go out a time frame, you're actually going to see it was on these two up bars. These two down bars are actually quite misleading, which is why it's difficult to trade. Because what's happened is they've marked it up, and then they've supported the market here. And you see two signals on the 30-minute chart, which is why it's telling you no trade at the moment, because it's been short and now it's going long. There's no trade there. And so Ali, the reason is there's no trade at the moment. You would have had a trade this morning, but remember, everything's fractal. When that appears on massive volume, supply coming in, there was a short trade. It took about an hour to develop. Okay? So let's go back to Smart Center and Sharpshooter. Let's have a look at natural gas. Now, I don't really trade this, but you can see why it's come up with an alert. Okay? Because what we've got is a sign of weakness here, the buying climax. We've got an upthrust, and we've got no demand. Now, you'll notice here that certain things are starting to happen on the different time frames. So let me ask you a question. Based on the fact that it's flashing, do you think go long, go short, or wait for potential trade? What do you think? Go long, go short, or wait for potential trade? You're dead on. You're dead on, all of you. This is telling me that something is happening in this instrument because the 30 minutes rolling, the 15 minutes going rolling. Okay, so is there a potential short trade coming? There's nothing else anywhere yet. But here, and this is live, I can't force the market to do something, and I won't. The strategy says, if you don't get the setup, I cannot take a position because I'd be breaking all the rules. That's pointless. So here, natural gas. Let's go and have a look at it. Now, I don't usually trade this instrument. So I'm going to start with the bigger time frame. Now, my goodness me, that is a shakeout. This is bullish. The 15-minute chart Yo, look at this. This is market manipulation 101 here. They've marked it down and reversed it. So yeah, I can see buying must have started here. Go to the 9-minute chart. Do we have any indications of strength? Yes, we do. Remember what I told you. Strength appears as they mark the price down. Somewhat, there must be some news around this, but that's big volume. 7-minute chart. Oh yeah, right there at the bottom, we've got strength coming in on high volume. Now, again, I'll repeat this. It's the gas, of course it is. Of course it is. So I don't trade this instrument, Reg, but thank you very much for telling me. Yes, it's the gas storage. It's the inventory that's come out. It's news. Remember I talked about news? There you go. Okay. So it's gas. Okay, so what they've done is they've marked it down, encouraged all the shorts, and then said, hey, thanks very much, we'll take your money. And again here, a shakeout. Now, if we get a test on this 3-minute chart, and I don't even trade this, I would, because it's going to go up here. This could be a very good trade. So I'm just going to come up to my dome on the other screen here and take a look at natural gas here. Okay, so I'm going to put an order in, and I'll tell you, let me show you the thing that's quite interesting. You see this black box that's just here, all right? This black box means that the market is going into a level of equilibrium. Okay, so basically you can see it's gone into an area where it's going to break out. Now this down move was massive and a lot of people would have been short here. What we need to look for now is some kind of test to the upside. Okay, we'll look for that. Now I've got the Smart Center coming up with some other alerts here. Let me just have a quick, oh no, it's still there. Now what it's come up with, which is interesting, is we're going to look and follow this to see if we get any alignment. All right, and we're going to look for the green to continue. There we go. And what we'll do is we will restore everything from scratch. So everything's now restored from scratch. So we can do this if you're watching the market and you're trading. If you see lots of alerts starting to come in, which again we've seen quite a few coming in on some of the time frames. When you see a lot of alerts coming in, and here they come now. Look, so we've got the euro, we've got the 6A, we've got the ES, we've got the British pound, and the 6C, and we had that set up on natural gas, which is now, I've just reset it because now it's starting to go into congestion, so we'll see what happens. And we've also got here the 6N. So the currencies seem to be the ones that are starting to move. Now with natural gas, what we're looking for is a test of the market, because they've marked it down, marked it up, and if they test this level, it will bounce very quickly and it will probably go up to this old high. And that to me still is an acceptable trade because it flashed, as you can see here. When we had it earlier, a lot of these things here are starting to go to align. So we're waiting for this to turn green and this to turn green, but that's going to take 9 minutes. So we'll wait and see if that happens. In the meantime, we're going to watch and see if anything comes up. And what I'll do, okay, so I'm just being told to go and watch the indices. Let's wait and see if they trigger. Let's wait and see if they trigger. Okay, because again, Steve Phillips is in the room here. He runs our live trading room, and he's saying that the indices are starting to bounce. We should see then, if they do, some alerts coming through. We should start to see that. Now, while we're waiting for these setups, do you have any questions for me? Because I'm going to wait now for the next 20 minutes here. I'm going to try and keep this to an hour and a half, but do you have any questions? Because we're just going to wait to see if natural gas here responds to the strength. And then we're going to wait to see if there's any trades on these other instruments. Yeah, that is called the short-term trending system. It's called the short-term trending system. If we go to the 30-minute chart here, right, what you're going to see here is a very interesting principle, which I love to see, is high volume on a down bar closing near the top. Now, if this next bar responds and closes up near the top here, that's a serious sign of strength. On the 15-minute chart, you can see we've got what we call a reversal bar. On the 9-minute chart, you can see right here at the bottom we've got stopping volume. So they've stopped the market at this point. Now, I've never traded this contract, to be fair, and it's quite choppy. So the one that we want to go and look at, I'm being told, is the E-mini S&P, which we'll look at. And yeah, I can see that is running very high here. Yeah, thanks, Steve, because you're right. Now we'll see if we get anything coming in on it. Okay, quite a lot of Phillips. Steve, sorry, quite a lot of questions coming in. Well, it's now booking, but I would like to record a video. Okay, you can get the recording for certain. Okay, Andres, sign of strength appear in bottoms many times, but there will be no full trend alignment. That's a good question. Okay, I understand your point. This strategy and the way this strategy operates is you will see signs of strength appearing in downtrends. And we have programmed into the strategy certain signals that will mark the bottoms that are against this trend alignment. In fact, what you're seeing at the moment is the ES really pushing up here on the 7-minute chart. Now, if it's rallying as strongly as it is, you can see now that the Swissy has just come in, and now the New Zealand dollar. So the Swiss franc, let's go and have a look at the Swissy. Okay, so we have a test, and we're at an old top. So again here, what I'm always looking for is you've got an old top here to the left-hand side. Okay, so your movement, your risk reward here, although this test could work and break out, as we'll see, is relatively limited. If we also look at the other trades that are being alerted to at the moment, we've got the 6N, which is the New Zealand dollar. So again, let's have a look. Not quite in alignment yet, but a potential trade. This is very close. This Swissy, we'll follow it. This is very close now. The natural gas still potentially got higher moves to come. Yeah, Paul, if you email either me or Laura, we'll send you the strategy document if you're a Smart Center Pro owner. So you don't have to worry. Just send it to me. And yes, you will need to make some changes into the full Smart Center Pro software to get the same strategy here. So let's see what happens on this test and see if it succeeds. Now, I'm watching again here. I'm going to restore everything. And we're going to see if anything triggers. Now notice about this strategy. At the moment there's a lot of congestion in the markets. That's a good thing to see. It means it's probably going to be a breakout. We can see natural gas is starting to move, NG. You can see it's just starting. Now we see the ES has just said, hey, potential long. Now they're starting to come in. See, now this is what happens. Right, now we're starting to see trend alignment. Now we're starting to see trend alignment. Good, I've got Philip Friston in here with us as well. And Philip's just saying that on the S&P, it's starting to bounce off the bottom. Sergey says, does this system help you identify zones? You'll need to be more specific, Sergey, please. What do you mean by zones? Scott says on the Swiss, the volume is decreasing in the last few bars. Okay, so let's go to the Swissy, right? Now we can see here that the volume is not excessive, but it's not, this bar here, the last volume bar here that we're analysing on the 7-minute chart here, is in fact quite healthy volume. It's not excessive volume, it's healthy volume, because it's not too high and it's not too low. It's what we call Goldilocks volume, actually, Scott, and you can see the market trying to react to it. Now, I think the best trade here will be the natural gas trade, and again here, it's got to start aligning, okay, and here, you can see at the moment there's congestion, but if we look at the actual screen, you can see the green is starting to align. But what's in the background of this chart? Because the background is the key. A 2-bar reversal on the 30-minute and a 2-bar reversal on the 7-minute. If I go to the 7-minute chart on the natural gas, okay, and we look at it, and we look down here at the strength that's in the bottom, and we go to, I think it was the, yeah, there it is, summer 5, beg your pardon. You look down here, the shakeout and the climactic action. Now what you want to see is a test. You see this green diamonds are starting to turn over on these small time frames. You see this? They're just starting to push. There is a gap that needs to be filled, but on the 30-minute chart, this is the bit that's catching my attention, is this bar here. Okay, that's done deliberately. They've obviously the news must have been fairly negative. Now the ES, okay, this has been firing off long alerts from down here. Let's go back and have a look. Okay, lots of questions coming in. I'm not going to be able to answer all of them. I've got 10 minutes left, but let's have a quick look. Okay. Okay, Andres, you're asking about signs of strength appearing at bottoms like this here, yeah? And that's correct, because professional money buy at lower prices. Okay, but if you use this strategy, what you're trying to find is trend trades. Read the document, Andres. Read the document if you've got it. It will help you. Okay, loads of questions. Okay, how do you analyse that ultra high volume on the ES this morning? Okay. Okay, so the 6A has just fired off a potential alert, but let's go back to the ES and look at the volume. We'll start, okay, with this. Okay, a selling climax on this green bar. Okay, now that started this upward move, which is basically responding to what's in the background. Now I talked about this background earlier on. The background of the chart is important. Look at the very high volume on this down move. They said, and Philip Friston, who did a webinar with me last night, was saying, well, yeah, the market fell, but there was a lot of volume at this level. Now, if you look at that high volume bar, if that was all selling, the market would continue to fall. Do you agree with me? If that was all selling volume in that high volume, the market would continue and keep going downwards. Do you agree with that? Correct. Right? But at the moment, what we're seeing is what could be an accumulation phase down here. Here, the market is rallying above the top of that bar. All right? Now, do we want to go long right now? Not right now. It's not triggered the alert. But is this area here that we're currently in very substantial and very interesting for the day's trading? Absolutely is. In fact, it's very significant. Okay, so what we're now going to do is go back and see, is anything triggered? Now we've got the 6A, the Aussie dollar. Go and have a quick look at the Aussie. And we'll start with the 30-minute chart. And again, on the Aussie, you've got some support down here. And you've got testing, but that's still in congestion. It's not anything you want to rush in and trade at the moment, because you can see the grey boxes are not quite there yet. So we'll wait, and we'll take those out, and we're going to just restore them and see if anything lines up. Now at the moment we've got a lot of congestion in the markets, okay, a lot of congestion, which means the markets are whipsawing waiting for a move. This is ideal, because we're at 3:30 nearly in the United Kingdom, and this is what happens in the currencies. You're going to get a move almost for certain. The British pound is looking at the moment like it's being marked up to this old top where the supply is. Okay, and now again we've got some trend alignment in the different instruments. Anti's saying gold looks like a short. Well, let's have a quick look. Let's see if we all agree with that. You may not be wrong there. Now, again, well, look at this. Andy just typed in, okay, gold looks like a potential short. Now I'll say, now I'm going to pull the trigger. Do you think long, short, or wait? What do you think? Long, short, or wait? Based on what we're seeing here. Long, short, or wait? Based on the sharpshooter. You get paid to wait. You really do. You get paid to be patient. But you're right. You wait. Why do we wait? That's going to take 15 minutes to fill, but actually it looks okay. And then the 6A is triggered. Now the 6A here has got potential. Let's just go to gold quickly and have a quick look at the small time frame. Yeah. Oh, that's definitely short. Yeah, there's definitely opportunity here for shorts. It's broken the low here. It'll bounce first. Remember, you don't chase the market on down bars. That's not good strategy. You wait for the principle in a downtrend, but you've got everything you need. You've got potential buying climax, you've got a secondary buying climax, and now you've got a downtrend. Okay, so you're absolutely right, Andy. It's going to roll. It will roll. If you were aggressive, you'd look at this and say, well, there's been support once and twice, and it's rallied. Now we've broken support on an increase in volume. If it goes up here on very low volume, there's a trade, almost for certain. Patience for a particular setup. If you're not, yes, Steve, exactly correct. You've got to be the patient. Exactly. Everything's about patience. Everything's about patience. This is definitely weak. I mean, you're absolutely right. If you were to put the Smart Center up and you put up the gold chart, look, you're very close. In fact, let's just follow it through. Let's follow it through. Okay. So you've got your sign of weakness, your no demand bar. That was on the 5-minute chart. Okay. Here is, I think, the no demand bar. All right. The market whipsaws, which is why it all went into a mixed color, but now it's starting to change. So yeah, definitely. Okay, good. Okay, I'm nearly done. I've got 5 minutes left. Still looking at some of these instruments at the moment. Got some questions coming in, so let me put that out. And then Marcus from Infinity is here as well, so he will be able to take questions at the end. But basically, we're still watching the gold chart. The questions come in, in fact, I've got an email coming about the trading room and how can we get hold of the sharpshooter strategy, okay, for futures, okay. I'll just put my screen up, and Infinity have this web page. All the details, right, including the document that I've just shown, or part of, well, you get the whole document, is all available from this web page. And you can contact your broker at Infinity. It's got the strategy in there. It's got details in there. I'm going to put it into the room here in the chat area. If you could just tell me if you can see it, this link. But my recommendation would be, if you've got more questions, the guys at Infinity have got these links. I'm not going to have time to discuss them with you. I don't have time, unfortunately. But they do. So if you contact Infinity, there you go. There's all the details right there. Okay, and those are the 2 pages right there. And basically they have access to the complete strategy that we're showing here. Okay, now I've got the Aussie dollar. Let me just go back here. That's very interesting. That is very interesting. There's, in fact, you might see right now. Yeah, you're right, Antti, about the short on gold. That's definitely triggered. And in fact, you're going to see it. It's coming up on and the pound as well. Excellent. So here, gold is all aligning to the short side. You can see everything aligning down. So that's that one. Natural gas, let's go back to that, is now responding. Okay, good. I think, yeah, I've been filled as well. So let's have a quick look. This is the one that was setting up on the alert. This alert came in earlier, and I just want to be clear, I did get filled on this. Okay, so the natural gas here is filled on that alert that came in. It was the first alert that came in. Now, I don't really trade natural gas. I'm not an expert in this particular contract, but what I can say for certain is the principles were there and the alert was there, and it's going to fill this gap. Okay, now I'm going to auto center this now, and what we're going to do, let's just bring the profit target down because I haven't got all day to sit here and look at it. Can you all see my charts, by the way? Can everyone see my screen? We're just bringing the stop to break even. Let's move the profit target up a bit. As I say, I'm not totally familiar with this contract, but we're right at resistance and we're trying to break through it. So now what I've done is I've protected the trade. I've got a little profit target above here, but Sharpshooter have definitely given this as a setup. It's starting to fire off others as well. Let's see if we can get something out of this. This is moving. This is an interesting market. Look, it's right up at, I've taken the trade at the top. I should have taken it down here, and it did fire off in the middle. But regardless of that, it's quite an interesting instrument to trade because it does whipsaw a lot. But the most important thing you have to realise about any of these things is you want to get the stop through your break-even area, which we've done, and that is part of Sharpshooter, by the way. That is part of strategy. It's not leaving the stop down here so it comes and gets you. It's trying to take something out of the trade, be it 20, 40, 100, whatever it is. That's quite important. Okay, Anthony, that's good to hear. Yeah, good trading. Okay, so I'm going to cancel that for a minute. I've got a little bit off that, but there's other things that are more interesting. I'm nearly out of time, but let's go and have a look at that. Let me scan here. Okay, so the one thing I did see there. Right, let's see if anything fires off now. We might get one more trade. I've only got a few minutes left here, but let's just see. Gold is definitely showing as weakness. Okay, there's no doubt about it. You can see here, this is going to fire off more shorts for gold. Okay, there you go. So, I mean, yeah, I missed that. To be fair, I'm trying to teach and I'm trying to look at different things. Natural gas was okay, but it's not something, I should have been focused on gold, to be fair. So, my apologies. I've been busy looking at all these different things and trying to help you guys, and unfortunately I missed a very good trade there. But some of you didn't. Some of you said, hey, it's all going red, and it will do. You'll see it fire off any second. And it would have fired off, well, it did fire off before. Unfortunately, I was so interested in natural gas, which has now gone into congestion. And this is how this strategy will work for you. Sometimes you'll get into a trade, and this natural gas trade, I still think will push higher. I don't think it'll come down too much further. But now we've got some serious weakness in gold. And we're going to start to see the Japanese yen setting up. Oh, wow. I'm going to keep this open. Marcus, can I keep the webinar open for another 10 minutes? Is that okay with you? I want to keep it to an hour and a half, but there's some stuff going on here. Okay, good. Okay, here we go.
Trend alignment to the upside has arrived. Trend alignment to the downside has arrived.
Gillian's just asking, there's something about the system that fires off a lot of trades sometimes at one moment in time. That's exactly how the markets work. And what I look for, Gillian, is something very simple. If everything's aligning and a key principle appears, that's the one I trade. Yeah, I mean, natural gas here, look, that made another high. It went right to the old top here, which is where I took a little bit of profit on that, but it was definitely firing off longs. Now I wouldn't do anything with that, but here, let's look. I'm just waiting here. Let's just see. Marcus, I've got an email just come in asking about, someone asked about commissions, and if they opened an account with you, I think you're with TradeStation, right, and you want to move accounts. Who do they talk to, Marcus? How does that work?
You can talk to me directly, or you know, I'll put my contact information here once everything's done, and if they're in communication with a different representative of the office, we're happy to open that discussion.
Yeah. David says, if you find the speech annoying, can you convert it to text? Yeah, that can be done. Not at the moment, but we can certainly change that if you really find a voice annoying. I actually quite personally, I've got used to it. It's my business partner, but it tells me when signs of strength or signs of weakness appear. I like to know that because it's where I'm going to hopefully make a good trade. Now you can see here at the moment we're in a really good trend on the Japanese yen, right? And that's where I think the next trade's going to come, to be honest with you. So let's have a quick look. 6J, yeah, this is definitely going to come. So we just wait. There was the alert that came in earlier that I missed on the upthrust. Okay, here is the weakness above us, right? You've definitely got no demand. Downtrend, and now it's gone up, and we've got an old low between. So this 6J will be the next trade. So let's just go and put the order in and get ready. It may fire off as we speak. We'll see. Okay, make sure again. I've got an 11 tick stop loss predefined as part of the strategy. That's my personal stop loss. Doesn't mean it has to be yours. Again, what we look for is we now wait. I'm going to keep this dome open because again we can. Okay, I've got another 4 minutes here. So the one I'm watching, ladies and gentlemen, is the Japanese yen, the 6J. You can see we've had multiple trend alignment to the downside. We've had weakness. We've had the upthrust, which we're on it. That should have been where the trade was. Having said that, there should be another one coming, and it's called no demand, and that will happen very quickly. Yeah, David, I believe that's potentially possible, just looking at your comment. Okay, Guet says, why doesn't this system analyze longer time frames? Well, because it's called a scalping strategy. It's a specific strategy for scalping the market. Is the system that we operate and we've developed capable of the bigger time frames? Yes, but go to tradeguider.com, our website, you'll see the videos. Okay, we've actually got some testing going on here on the NQ. Okay, let's have a quick look on the other computer here. Yeah. Okay, let's see what happens. So we've got this, the Dow that's firing off here. Okay, so again here, I'll just show you the strategy here. Okay, looking at the Dow, which has just fired an alert, what do you think? Potential long, potential short, or is it looking like it's bullish? What do you think? Okay, so we've just had here a test on the 7-minute chart. Okay, so let's see what happens. Let's go and look at the Dow. That's where it's just come in. Again, you go where it is. 7-minute chart test, and they're testing this volume. That can be very, very bullish if this moves up. It's got to break the top. That can be very, very high. Now, while we're watching that and waiting for that to come in, and let me just say, I think I'm filled, and I am here. So I'm filled on the Dow. Let's just show it on the screen so you know I'm filled. Okay, so Okay, good. You should all be able to see that. Okay, so we're looking for the response. It's a trade alert to the long side here on the Dow. You can see my entry there, and we're going to try and break this top. Again, the usual profit target for this strategy is 11 ticks, which is up here. But we're right at the end of the session at the moment. But it's there. It's a trade. It's an alert. Okay. Yeah, my stop loss is actually preset to 21 down here. I can show you that, just so someone asked. It's there, down at 20, down the bottom of this bar. So if it goes against me, that's my risk. And my reward would be the break of the top of that bar. Now, again, you want to be trading tests down here, really, but obviously in this instance, it's a breakout of an old top. These sometimes work, and they're very profitable. Sometimes they don't. But nevertheless, the alert was definitely there. And if we go down and have a quick look at the strategy, you can see both the NASDAQ and the Dow fired off. Delta divergences, says David. I don't have a clue what you're talking about. Don't know. I don't use delta divergences. I use volume at the bottoms, definitely, to look at the unusual volume and the spread of the bar. But I wasn't ever taught to use delta divergences, so I can't comment. Sorry, I don't use them. Yeah, can everyone see the chart, by the way? Some people are typing in questions like you can't see the chart. You should be able to see a 7-minute time frame with a test on it. Can everyone see it? It's quite clear. Okay, Charles is just explaining that to me. I don't use that. I'm using simple logic here. That what we have is a markup in price, a test of the top. If it breaks out, it'll be a very nice trade. But I know what my risk is. Natural gas trade, that can break out too. Yeah, no. Yeah, well, David, drop me an email. I'd love to find out more about it. I mean, that's something I don't use personally, but, you know, contact Infinity. They've got my email address. Be very happy to listen. Again here, what we're seeing, though, is the two alerts that have come in on the 7-minute time frames are an attempted breakout of an old top. Now, this is not always where I would trade them. I usually like to trade in a trend. We're at an old top. But if it breaks out, that will be a very good trade. If it doesn't, you get stopped out. That's the cost of doing business with the market. Now, Marcus, just a quick question. If these guys want to get a copy of the document, I've put the web page up with the document on it. What's the best? Can you just go through briefly how they get in touch with you guys? Because I mean, I've got my account with you guys, obviously. But how do they get in touch with you?
Sure. So basically, we have an open line of communication through everyone that is in attendance in this webinar presentation. You can give us a call directly. You guys should be receiving emails from us, especially if you attended this event. I would imagine that you most definitely have a point of contact here at Infinity. You know, if not, just get in contact with me directly. I put my information in this question box. We appreciate and we love questions. We love helping you guys. So please give us a call. Simple as that, man.
Yeah, and I'm sure you'll do a follow-up email with all the details, yeah?
Absolutely, absolutely.
Yeah. Tom, have I waited for confirmation on this test? No, I haven't. No, and sometimes you should, but if you look at the 3-minute chart, it's interesting. This could be the top, or they could test this level and it could break out. These are the things that, when you're trading, you know, if you look back and you go, well, that would have been a great test, and look, it went down and then popped up. This is how it works. If we see a test here, and I'm just going to wait to see if we do, then the breakout will happen. It just takes a little bit of time. Okay. Yes, it is, Plowman. It is. Look at, okay, we'll do. Let's just have a quick look. That's the, yeah, so it was at the old top. That's exactly right. So it went up, hit the top, and it's just recorrecting on there. Yeah, correct. Okay, I'm just looking for any more questions, and then I shall hand it over to you, Mark, because you can wrap it up with your details.
Sure.
Why is the opening price not important? I wouldn't say it's not important, just we don't use it in this particular method. Let's have a quick look. Okay, we've got another one that's just coming on gold here. That's a short. Let's have a quick look at gold. So what's happening here? Now that's an interesting one. Somebody were talking about gold being weak earlier. Yes, it was supply hit. Supply hit. It's come down. Now this could be a very interesting area in gold. For those of you that trade it, that is what I refer to in my book as a gotcha bar, and that is exactly what it does. It's taken out price support. So watch very carefully. If this continues to fall, then the indices will rally today. Right? They've had a downward move. You will get a rally in these indexes. In fact, here's the 30-minute chart of the S&P, and you can see where the high volume on the down bar was, and they just marked it up, and it wants to break out high. So keep an eye on it, because remember, looking at this at the moment, the professionals have bought down at the lows here. That's what I'm seeing. And I think, Steve, you're in the room, you'd probably agree. Now, at the moment, we're trying to break this high. I think we'll do it. I think it'll happen. Yeah, well, it could be 5 more. Yeah, I believe that's definitely right. I mean, looking at the trend, and again, let's just go and look at what this is all about. We're looking at the trend of price, okay, and we're still at this moment. Yes, we've gone in. I've personally taken a trade near a top. The strategy, if you read it, says take a trade within the trend, but you can't. You know, beggars can't be choosers sometimes. If this breaks out, it's a great trade. If it doesn't, I have to get in again. Because professional money will buy at lower prices. They don't buy at the higher price. Having said that, there are many occasions where you'll see a breakout trade to the upside that will move extremely quickly. This isn't happening right now on this particular instrument, but they could be starting to accumulate at this level. We just have to wait and see. See, the software is quite intuitive. It says there's no demand here, so they're not ready yet. Fine. They're not ready yet. Doesn't mean they won't be ready at this price level. You just have to be patient. Ladies and gentlemen, thank you very much for all your kind. I've seen some emails coming in to me as well. That's a pleasure. No problem at all, guys. And we will send everyone who's a customer an email with all the details of stuff today. Can I just say thank you to Infinity, and obviously to Marcus and Glenn and to Jim the Moonies and Jim Cagnina and the whole team there who do a great job. And Marcus, I'll hand over to you, and hopefully if they've got questions, they can just call you guys and you can assist. Back over to you.
Yes, thank you very much, Gavin. Excellent presentation. Want to thank you again for coming in today and doing this presentation. We've been working with Gavin for quite some time, and it's always interesting and entertaining. And going forward, guys, if you have any questions whatsoever, please do give us a call. The software that Gavin is using currently is the Infinity Active Trader platform with our charting software. You can get on a demo trial of this platform for free. It's a 30-day demo, unlimited access to these markets, absolutely free. So we don't charge you just to review the platform. Give us a call. Everyone is waiting patiently for you guys to give us a call right now and get on a demo account. If you're currently a client, you know, give us a call anyways. We'd like having conversations. My phone number is in this question box, so you can give me a call directly. I'm literally right here. My phone is not forwarded anymore. Appreciate it, guys. I am going to go over something very important right now. I'm just going to change the presenter to me. If you guys can see this, yes. Okay, we are golden right here. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So thanks once again. Aaron, just answer some questions that are coming in right now.
Marcus, just quickly,
Yeah.
someone's asking about the free book and video we offered. We're going to email that to everybody. We'll send you the link so you can email it out.
Excellent.
So Richard's prepared that. That is a complimentary link to my book, the download of the book, and it's got a video that goes with it. But for those of you that can't wait for that, which is quite understandable, you don't want to wait, just go to this website. It's publicly available. It's just www.tradeToWin.com. And there's a video on there. Now, it's interesting as we're looking at this, the market is responding to that test in the Dow. And that's not surprising that professional money will mark it up, mark it down, and gold, just for you guys that are trading gold, it just triggered. So keep an eye on gold at the moment. It could be a day where it has quite a decent fall at the moment. So watch for no demand from my customers on the 30-minute chart. Back to you, Marcus.
Thank you very much. So I had some people that said that they can't see the phone number. You can just write it down right now. My direct line, if you have a pen and paper, I'll wait 1 second for you. It is 312-373-6255. I'm going to go straight to my desk. You don't have to deal with, an operator or anything. And once again, it is 312-373-6255. So thanks again once. Gavin, for coming in here, very much appreciate it. I look forward to future events with you, and if you guys need anything, please do give us a call. I'd like to get you on a demo account. There is still a lot of time in the trading day, and we have tomorrow as well, a lot of interesting stuff and volatility hitting the market. So now is an ideal time to get our software up and running. Thanks, guys. Appreciate it.